Good morning. It's 10 o'clock Pacific Standard Time. Date, wonderful Sunday period. And that means it's 126. We had a huge sell-off in the S&P 500. And one of the things that we are seeing here is a huge breakout in this fear indicator. When this fear indicator was as big as that, here's what happened. This was the S&P 500. The index itself, it had a big reversal and a big breakout here in the fear indicator, which was long overdue. So when we broke out into a calendar 2014 high up here at 18 level, that is when the fear has been escalating. And it has happened in one day, which was on Friday. And not only that, the S&P, we already did the charts. You can go find them. It closed down 38 points, which we haven't seen in a long time. So when this daily fear, this big sell-off right here on Friday was also the volatility index, and that fear indicator broke out. We told everyone that people were very complacent, that people had no fear. No, everything was just as great as you could want it. And that's exactly what it showed. And not only that, we have told our bigger traders that 2013, you can kiss it goodbye, because you're not going to see another move in all of these indexes that you seen in 2013. That party's over. Now we are going to return to historical volatility, and that both the bull and the bear within a bull market run is you have to have fear. Yes, you do. Not only that, when I talk about looking at this chart and I talk about where every time that we get down to this kind of level, if it was going back in May or any one of these big breakouts, that's when equity markets on these breakouts were going down. When this was going down to its lows and consolidating, we have a big breakout here, folks, on the fear indicator. And people don't pay attention to it because they don't. But it's a perfect barometer that when that's breaking out, we want to be shorting S&P stocks. And not only that, when that gets ready to really work and pull back and set up another base, it had its one biggest daily movement this year in 2014 right here. It went down and we could not break above 1850. On the S&P, we started to get a breakout formation, but it did it all in one day, and that was on Friday. Now, just remember, when this starts to reverse and go the other way, that means that the SPY, the spiders, will go higher. Not only that, if I'm buying calls on the S&P 500, I'm going to want this thing reversing. And it's the one-day breakout, the biggest breakout that we've seen in a very long time. And it happened in the month of January so far. And other periods in January have not had a big daily breakout. So once we start to pull back, that's where we look to go long the S&P. And there are various different ETFs that one can buy. And there's also call options on the S&P 500. There's bull ETFs on the S&P. There's also bear funds on there. There are lots of different things to do. But here's the thing I will say, and it will not change, that 2014, as we said before, 2014 started that you're going to get that fear in this market. You're going to get it where the investor or trader just thinks that everything is perfect. And they think it's a rosy picture. I've got news for you, though, and here it is. We're going to have a lot more of this throughout this year. And number one, the people that sit around and buy equities and think that they're okay, you got another thing coming. Because when this starts a big breakout starting 2014 in January, you're going to see a lot more between now and December 31 of 2014, which is almost 11 months out. You will pull back, and that volatility is going to be here. That means that people that didn't get money into the marketplace, you got a chance to buy the dips. When the dip buyers step in, this is going to go down in value right here. Right now, fear is at its all-time high in 2014.